Hey, good morning. Let's go over today's trade plan. So in the overnight session, we had support at 67 quarter to 68 quarter, and buyers held ES above there, and then pushed ES up to the 75 half to 77 half zone. Now at this point, heading into the session, we are trading at the recent highs that we've put in over the last couple of days. So there are a couple of scenarios that can happen here. One is if we continue to hold above 73 to 74 quarter, then we can balance and it can result in an upside breakout for a test of 81 to 83 and 86 to 88. So in the event of a upside balance breakout on strong internals and strong momentum, we can head up to 86 to 88, and the high odds resistance zone that would get tested is 81 to 83. But because we would be breaking outside of a 3-day balance, we don't necessarily want to short 81 to 83 unless there are some very clear signs that are pointing to the probability of a failed breakout. If, for example, the internals aren't really supporting the move, or if the momentum's not quite there, or if the other markets are diverging, then that could be a reason to be cautious on buying some of the higher prices at 81, 83. But we do have to be careful on shorting any break above 79 quarter, because that could result in a move up to 86 to 88 before some better sellers step in and we start getting some better rotations. On the downside, in the event that we fail at this recent balance high, right? So we have this 2-day high from the last couple of sessions, and there's still a possibility that responsive sellers can be active up at this area. And on the downside, then we can push to 68 quarter to 70 quarter quite easily. So a break below 73 to 74 quarter, or a strong failure at 75 half to 77 half can result in a move down to 68 quarter to 70 quarter. First test of that area can still attract buyers, but if the momentum is really heavy on the downside, then we'll actually have to be cautious fading the initial support zone as well, because a strong failure at the highs here and a down move on strong momentum and weak internals could lead to a test of 62 half to 64 half. We have some minor support at 66 along the way, but the idea is that if we fail at initial support, then that level is not really going to hold or provide much support, and the next key inflection point is 62 half to 64 half. So this is the area we're using as the bull bear zone, and this is the area that buyers can still defend if we're going to maintain some of these higher prices and just balance at these higher prices. So this is an important area, and the expectation is for buyers to be active here, first test, and unless there's some clear trend down type scenario that's setting up, which at the moment is not the expectation. As long as that's not the case, this bull bear zone can provide at least a short-term bounce, even if it's eventually going to fail. Now, this being a key area, as long as this holds, buyers can still maintain control within the recent range. If this area breaks, at that point, that would be a confirmation that sellers are in control, and we could go down to the balanced lows. So, 57 half to 59 half would be the easy downside objective, but because this zone's been tested so many times, we do want to be careful here. It's a good spot to cover if you're short, but on the long side, it does call for some caution. The real support on the downside at this point is, these balanced lows around 55, 56, and that's a spot where buyers could be active first test. But if we break 62 half, 64 half, we really do want to be careful on the long setups, because at that point you could go down all the way to the balanced low and even extend it down into 53 half, and this key support zone down here at 48 half to 50 half. And like I said, right now that's not the expectation, but just to be prepared in the event that this day does actually change from the bullish action that we've seen in the overnight session to a bearish session on the day time frame. So just to cover the scenario if the bull bear zone breaks. But as long as it holds, we're not going to be focused on that big downside scenario. The overnight session's been quite bullish, and at this point, if we can hold above 73, 74 quarter, then we could just continue balancing at these highs and then eventually break out and go up to 86, 88, 81, 83. In the other markets, NQ reached an inflection point in the overnight session. There's a high volume node in NQ at roughly 40.58 to 40.60, 61. So how NQ deals with that high volume node will also tell us, where this market could be headed. If it breaks out above 58 to 61, that would tell us that there's some decent strength across the equity markets, and then that can lead the other markets higher as well. Looking at the Russell TF, ideally you want to see the Russell hold above the 1113 to 1114 area, but below that we have a key high volume node around the 1111 to 1112 area. So as long as that at least holds, there's still potential to head higher. But if we start seeing TF break below the 1113 to 14 and then 1111, then that would be a red flag, and it could result in some more selling in the other markets as well, because right now we're basically just within a balance, right? We're within this established range, and we can either balance up here and break out, or because we're at the highs, sellers can be aggressive off the open, and we can get a push down to initial support, and then from there 66 and the bull bear zone. So we're just gonna have to watch kind of off the open how well this pre-market support zone is holding up. That'll provide us a pretty good clue as to where this market could be headed. And as long as we hold above pre-market support, then we'll be more bullish. If we break below it, it'll be a bit more neutral. And if we start seeing some big downside momentum, then we can even hop on board on the short side and then use initial support as a target. And if there's some really heavy momentum, then even the bull bear zone as a downside target. It's also the last day of the quarter, last day of the month. So because of that, there could be some squaring of positions, and there could be a directional move today in the event that we do break out above this pre-market resistance zone, because a lot of traders, I believe, are short over the last couple of days, last 3-4 days, and a break above the 75.5 to 77.5 could result in some short covering, and that'll also support the idea of a move up to 86, 88. On the econ calendar, we have consumer confidence out this morning and Chicago PMI, so just be aware of those. Aside from that, let's see how well the buyers can hold it up above pre-market support, and we'll take it from there.